All right, gang, welcome to the Double Your IRA Daily Market Update. So what you see on the screen is what it's all about right now. So it's the February jobs report, and it comes out tomorrow. Then Monday we'll get some retail numbers. So the retail report that we were supposed to get's a little delayed because of the government shutdown, of course. And so it kind of is a double whammy. We'll see how this is going. The expectations are 180,000 jobs tomorrow. You can see the person that's talking in this report is expecting 300,000. Now, Goldman has the opposite opinion. They think things are really starting to slow down, and they think we'll see it in tomorrow's job report. Now, we want to remember, we've got a big report coming up on Monday, which is our first retail report since that damaging retail report that just recently came out that sent retail into a spin down. So you can see a little bit of news, market after market news. Everbright crashes 25% after giving weak guidance. That's kind of the theme going around right now, right? That's pretty much the way it is. Let's pop over and take a look at our charts. You can see our S&P 500. We're in that big channel there, and that's a lot of work it's going to take to get over that 2,800. So we'll see how this works out. But all we're doing right now is, we made this big run up from that bottom, and even with us, we cashed out 500% wins in a row in this channel. But we knew once we got up to this 2,800 level that it was going to be tough going. And you can see it. It popped, actually closed over 2,800 a couple of days ago. But hey, welcome, Jeff. We're gonna do a little NIO today, so hang on. But thanks for making it. I think we've worked out a lot of the issues with the show. So you guys let us know how it goes. But welcome, Jeff. So we're in that little range there between that 27.15 to 28.15, and you can isolate this to even a tighter range, but that's the story right there. So, and it's all going to ride on that report there. So we'll see how that shakes out. Like we said, we're still holding our positions. We just took up a position in AKS. AKS had a little bit rough of a day today, but it was kind of like with everything else, the sentiment's not real good. But on our year chart, we get a nice big chart there. You can see we're just languishing down there in that bottom level or our Fibonacci. And so we'll see how that shakes out. But we like the positioning right now. We like the cheap price. And we think as we get some trade resolution, maybe a little bit better economic news, steel will finally start picking up some slack here. Now, XRT, you guys know we're in an XRT play. We've been in it for about a week and a half now. And we're still just oscillating around that 50% level on our Fibonacci. We knew this was going to be a little battle, right? We need to get over that $47 mark on XRT, and we'll see. Like I said, on Monday, we've got our first retail report since that damaging report, and this is the one that was delayed because of the government shutdown. We're still in Twitter. Twitter's still playing in that little channel there. You can see it, it's just rocking in that channel, but it's like a coiled spring. This is the thing. We feel like the market's like a coiled spring right now, and it's a dull market, and you never short a dull market. It's been this soft trickle down in the mornings, then it kind of firms up around lunch, and then at the end of the day, it kind of pushes upwards. And you can see that in the spider chart. We'll go right back to that in just a second. Let me give you a bigger chart here. Oil, we're still in oil. We like oil, and all we're doing is building that tail there on a nice cup and handle. A lot of these charts look the same, don't they? And there's a reason for that. Now, the other play we're in is CLDR. We like this play. We like this play a lot. We went all the way out to January on some options to give it time to absorb volatility and to rebuild. This is a stock that IPO'd about a year ago, and it's kind of just trickled down since then. There's some earnings problems, but we think it's resolved a lot of its problems, and we think it did it at a key time in the sense that now it's kind of catching the sentiment of the market along with some good stuff. You guys know we're in GE, and guess what? GE gave us some good stuff today. We held that 923 level on the Fibonacci, and we just popped right back into that little range there. It's got a little work to do, but the stock really showed some technical strength today, and we're going to stick with that play. Well, let's jump back to the SPX, the S&P 500. You can see what we're talking about here. It's just been, since we hit that 2,800, it's just been languishing and a little bit of sentiment selling down. But technically, there's a lot of supply back here. So it's going to take a little time to work through that. And we'll let it do that. One of the encouraging things is if you look at a 5-day chart or even a 1-day chart, look at that big, strong close we had. Those last 5-10 minutes really were impressive. Those last few minutes were really impressive there. Nice push by the markets. Maybe people positioning for tomorrow's report. Who knows? But Jeff, we wanted to touch on NIO because you had asked about it the last time we were talking. And we like it. You know, NIO is one of those that we made a chart just for you, Jeff, and for the NIO fans. This is the way we think about NIO. If you can accumulate it between these two lines, you're probably getting in at a great price. So anywhere between about that 820 level down to about the bottom, you should be fine. This is a newer stock too, right? This just IPO'd in 2017. So it's developing some data and stuff. And it had a nice little run up there the last couple of weeks, but it's pulled back like a lot of things in the market. Very buyable right here, Jeff. And like with you, Jeff, you're a longer term thinker, which is the smart way to play this market right now. You don't want to get caught in these little day-to-day things because you see how it is. You get a little push down, and guess what? You don't really get what you need to really capitalize on the puts. And then you get a little bounce, and guess what? You're out of the puts, and maybe you're in calls. It's just sideways motion is really a wealth builder's enemy, right? So we want to play with a little longer term of a view, and that's the smart way to play this, Jeff. You're playing it smart. Just hold on to it. As long as you bought in that channel there, just sit on your plays. If you bought a little high, when it does come down, oscillates down there, you grab a little shares, average into it a little bit, and show some patience with this. It's a good company, and it's a new stock. It's only been trading about a year. So give it a little time to build some data, but that looks like your point there, Jeff. So we didn't forget you, Jeff. We heard your question about NIO. We're still waiting for AJ to show up. He was asking about how do we feel about the market. We feel exactly what we just said. And what that is we've just had this huge run up off that very dramatic bottom in December. This was good times, right? 5 in a row we hit 100% plus, but we knew once we got in this channel, there's a lot of work to do, right, Jeff? So we've taken our positions. We think it'll work through this and take another shot at that high. Now, at that point, you're really going to want to take a look at the markets because, again, a lot of things change in the economy, but nothing that should be changing that dramatically right now. So we are playing it for one more move up higher. We're still a little bullish on the market. Long term, you can see we've gone out on AKS. We went all the way out to January on those options. We got a sweet strike on those too and a great price. We were talking about that the last couple of weeks, right, Jeff, with steel. We were looking for a point to get an entry. U.S. Steel is getting there too, Jeff. I know you're a fan of U.S. Steel, and so are we. We own a bunch of shares at a little bit above $19. We've owned those for quite a while. We've always liked U.S. Steel. But again, Jeff, right, with this one, be patient. You build your position, and then all of a sudden that trade starts resolving. A little bit of this negative sentiment comes out of the market. And guess what? All of a sudden you're back at $35-40, which is where this stock really likes to trade. We popped the Fibonacci on here because it's a stock that we watch a lot, right? All our regular viewers know. So, another one, it's just like AKS. If you look at a year chart of AKS, it's been a long 12 months for these stocks, and you can see they're kind of at a bottom. So steel's really taking a beating. Is it time to buy? We think it's time to start taking some pokes at it, especially AKS. You look at it, we've got this bottom here, goes all the way back there. So to 2016. So it's got some support here, and it gives a lot of good reasons to get involved. And that's the way we're going to play it, right? So look, gang, big number coming out tomorrow morning. So let's call it a day and let's get some rest, okay? Jeff, you come back tomorrow. See if you can find AJ and bring him back too. But share the show. I think we've worked out all the issues with the technical problems, getting used to using YouTube and answering the questions and all that, right, Jeff? It is pretty smooth today, wasn't it? Anyways, so let's call it an afternoon. All right, Jeff. God bless you all. You guys have a great Thursday afternoon. We'll be back after the market today. Big number tomorrow. Let's review real quick before we go. For all you viewers out there. So big number tomorrow. We got the jobs report coming tomorrow. Good article about it on CNBC, and it kind of presents some interesting angles there. One economist is talking about 300,000 plus jobs, but then they kind of get down there to Goldman. Goldman's kind of the pea on the party group right now, right? So if you guys got time, go over and check out those articles and stuff. They're important. But the one that a lot of people aren't talking about is on Monday, we have a retail number. Now, this is a delayed number because of the government shutdown. And it's also the first number we're getting since that bad number we got a couple weeks ago. So we'll see how it shakes out. You guys know how we're playing it. We're long retail right now. So you have a great afternoon. We'll be back about 15-20 minutes after the market tomorrow. Let's see what kind of market this Friday gives us, okay, going into the weekend. Again, thank you for joining us. If you have friends, please pass along the YouTube page. You can find us on Facebook also, too, at Investing Lovers. There's a link at the top in the bar. Come join us. And also don't forget to read the disclaimer. We are not registered investment advisors. Past performance is no indicator of future performance, and always consult a professional before making investment decisions. And the SEC does not consider us professionals. All right, gang, you guys have a great afternoon. We'll see you tomorrow after what should be a very exciting day tomorrow.